All right, and welcome back to the show, guys. I am super excited for today's guest and today's episode because we are going to be talking about real estate investing, but more specifically, real estate syndications. And our guest today is a real estate investor and syndicator of over 600 units, Jim Lee. Jim, I want to welcome you to the show.
Thanks for having me on the show, Kobe.
Yeah, absolutely. I'm super excited to have you on, Jim. And before we kind of dig on in, would you mind just kind of sharing your story a little bit about, how you became an investor and kind of how you got started in real estate and what was the journey from, starting out to now, being a syndicator of over 600 units?
Sure. So I graduated from UCLA with the economic degrees back in 2010, which for many of you guys would know that that's right after the 2008 subprime mortgage crash, and 2010 European debt crisis was right after that. So it was very difficult for me to find a job right out of college. I started getting really good at interviews because I went through so many of them. Eventually got really good at selling myself, landed myself a role as an inside sales job at working at LoopNet Costar. Now, for those that don't know about LoopNet, it's basically Zillow for commercial real estate. Um, at this job, I managed to speak to real estate investors, agents, property managers, lenders on a daily basis, and I kind of learned the importance of having multiple stream of income. Decided to save up, enough capital to purchase my first 2-bedroom, 1-bathroom condo. Got my first passive income, was hooked to it and never looked back. And eventually I transitioned from being a W-2 employee to a realtor to make a career out of real estate. And then somewhere in between, I kind of just branched off and decided to syndicate some deals.
Yeah, that's awesome, man. So it just sounds like real estate has kind of always been, something that you did and something that you are looking to do. And that's like the career progression that you had as well. So, I mean, so you mentioned you were a real estate agent. So kind of walk us through that decision and maybe, talk a little bit more about, how when you're a real estate agent, how you end up kind of moving more into the investor side. Cause, it's kind of weird because a lot of real estate agents are not investors, which is it's kind of weird to me. So.
Yeah, so I actually came from the other way around. So I became a real estate investor first before I became an agent. So I when I was a W-2 employee, I actually got laid off a couple times. And because of the downfall, I figured, okay, I cannot rely on my salary. I need to create additional stream of income in case something happens. And that's why I decided to acquire that 2-bedroom, 1-bathroom condo. Why I became an investor first before an agent. I became an agent afterwards because I thought that, okay, now that I've acquired my first deal, how can I get more? Just like any other investor, right? How can I build my real estate portfolio? And so I got like my license thinking that I can find my own deal, but it wasn't as easy as as I perceived. And so my other alternative was to make a career out of it because I didn't want to go back to being a W-2 employee. But then I realized that it wasn't a good fit after doing it for 2 years. And during lockdown is when I kind of pivot and started to educate myself about other ways of how to, make money with real estate besides being a realtor.
Yeah, absolutely. And it does look like, that was part of part of time where like everybody was kind of making a little bit pivots when it comes to their career as well as like during lockdown just a couple years ago, right? If you're listening to this. So, kind of walk us through the decision of, what was it that kind of made you look more into syndication? Because there's a lot of different avenues when it comes to investing. So syndication is one that I think is pretty popular amongst a lot of people and a lot of investors. And that's a good strategy for people to scale up. So maybe walk us through the decision of, what made you choose this one versus any other, real estate investing kind of avenues. And, if you looked into any other ones as well.
Yeah, great question. So I have multiple answers to that question. I would say the first answer I would give you is the ability to help build wealth and help other people reach the goal of financial freedom. I realized, once I got into real estate, that within my circle of influences and circle of friends, families, right, everybody has a dream of reaching financial freedom at some point in their life. And for those that don't know, they eventually they will. And so it's just a matter of time, right? And so I think that the beauty of syndication is it's a win-win situation. For those that don't know what syndication is, it's basically a partnership between investors who pool their resources together into one single investment. This allows you to invest in multi-million-dollar properties like multifamily, which is the asset class I'm in, or any other commercial buildings like strip mall plaza, office building, and so forth. Syndication eliminates much of that risk while sharing the upside. So the property generates an income. It will just be split amongst investors. So it's a win-win situation for both the operator and the investors. So I figured, well, if I can help my family and friends reach financial freedom quicker, faster, with a stable asset, why not, right? I have to be able to put myself out there and let people know about this stuff. I can't just be hiding in the shadow and basically keeping all this information to me, because it is a very niche. It is something that not many people know about. And I think when you mentioned the word syndication, people kind of they're turned off by it, because the idea of betting, putting so much money into a deal where you cannot take it out for 5 years. So that's something that you also have to consider in syndication, because we buy these buildings for 5 years and we hold it for a good amount of time until we are ready to sell it to 2x your money back. So that's basically one answer to your question. The other answers, I would just have to say that, it's the idea of, I think at that time, my hands were tied behind my back. I couldn't host as real estate agent, I can't host open house during lockdown. So one of my real estate investors introduced me to this podcast show called Real Estate Guy Radio Show. And on that show, they pitched about doing syndication like religiously. And that's when I started to, that's when it piqued my interest about it. And once I started studying it and educate myself about it, I just knew that this is the path for me. This is what I'm passionately I can see myself doing this, waking up every day and doing it passionately without thinking that it's work, because not only does it help me build wealth, financial freedom, but it also helps my family and friends.
Right. Absolutely. I never even really thought about it that way, where, as a syndicator, right, you're able to pull together money from other people. And in the process, you're able to help other people build financial freedom while you do it as well. It's almost like kind of pulling together, different people's specialties and resources, right? Like as the operator, it's more kind of your expertise, but you need, the funding and the financing from a lot of different people that as well. In the process, you all win, or, you all take on the risk, and you all kind of spread it out amongst everybody, so that it's not, all on one person, even if they're the financing person or the operator. So that's actually a really good way to kind of look at syndication, right? Is that how you would explain it to maybe some of your passive investors as well, that it's a process where, everybody's able to win?
Absolutely. It is a partnership. Many people don't understand that the syndication is a team collected effort, right? You can do everything on your own, but it's very hard. It's very hard to reach to a certain point. Like if you're managing 100+ unit apartment building, you need to be able to build these relationships with real estate agents, the ability to be able to close properties like that, to be able to raise that amount of money for down payment, and to have established a strong relationship with a lender who's going to lend you 70% of the value of the property. So, and we're not talking about just $1 million. We're talking about $50 million deals, right? So, it does take time to build those relationships. Also property managers, once you take over the project, the main role as a syndicator is to manage the property manager, right? To make sure that the operation is going according to the plan, and that we're going to be able to hit our business goal in 5 years, right? So, and then also be able to continue to build strong relationship with investors, right? To keep them happy in case if there's any capital calls, in case if things go south. I can give you an example where, our first deal, had 80% occupancy rate after taking over the project, and it was eating our cash reserves. And so instead of we had a capital call, but instead of putting the pressure on LP, which is the investors, we decided to have a capital call amongst the general partners, the operators. So those things are very important, when choosing the right operator to invest with.
Right. Absolutely. And, kind of talk a little bit more about, if you don't mind, just the role of the operator, right? I know you touched on it a little bit, but I mean, is it just, maybe you can touch on just like your operation. Is it just yourself? I mean, or is it just a team of people kind of working together, or somebody maybe managing the property? And then, because there's a lot of moving parts, right? When it comes to syndication, right? You had to raise the money, you have to actually put it together, and then, actually get to the deals and then manage it and everything. So how does that actually work from just the operator standpoint?
Yeah. So typically what the process is that we go out and we do a due diligence, just like any other real estate investor. When you look at a property, you have to run the numbers, you have to check out the neighborhood, check out, if it's worth investing, if it has potential for appreciation, right? Over time, right? We do the same thing. It's no different, right? And we're just doing on a bigger scale. And it's the reason why we do on a bigger scale is it's a lot scalable, right? If you think about syndication, we're targeting these big projects. It's scalable because, first of all, if you can build these real estate portfolio one at a time, one single family resident at a time, 1, 2, 3, 4, 5, until you're maxed out on your Freddie and Freddie Mac loans and stuff like that, up to 10, right? But then you have to manage 10 different roofs, and you can't have 10 different on-site managers at each one property. Whereas 100 plus unit apartment building, you only have to repair or fix 3-4 roofs, right? Total. And because all of them is all under one property, and then you can have one on-site manager. It's a lot easier to scale. Also, you're able to attract more sophisticated real estate agents, property managers, and lenders. Everybody's at a higher level, right? In a sense. So that's one thing, is that we go out and we source out these deals. We do our due diligence, and we figure out, we find the property first. And then once we were able to do so, once we run all the numbers and everything makes sense to me. And just like any other investment deal that we look at, right? We typically submit 100 offers, maybe get one accepted or something like that. I don't know what the ratio is, but that is basically what we do. We get the property under contract, and then we raise the capital for down payment. Also CapEx. In this kind of environment right now, because the interest is so high, we raise enough money just to get the property to the finish line, basically to close. And then we'll raise CapEx on the back end once we close the property. And then from there, and then once we take over the project, we just, like I said, manage the property manager to make sure that we hit our business plan. And typically we use the first years of cash flow to renovate the apartments. So the way how the syndication works is that you're probably going to ask this question, so I'll just answer it for you, is that, you put 100,000 into the deal, right? You can expect 2x equity multiple at the end of 5 years once we sell the property. However, you are also going to be getting 8% preferred return. What that means is that you'll get 8% passive income, mailbox money every year. So if you invest 100,000, you'll get $8,000. But you won't be getting that 8,000 in the first year, because we're using that cash flow to renovate, right? However, what preferred return means that it does accumulate. So whatever we don't pay you on the first year, if we pay you 1% on the first year, we sell you 7%. That 7% gets added to the next year. So we'll owe you 15% the next year, and so forth. So that's the beauty of syndication. It's not only do you get the cash flow, but you also get the upside at the very end. And typically we use, like I said, we use first year cash flow to renovate, and then the third year we'll typically refi, pull some capital out, make some distribution, and then year 5 or 6 we sell the property to get the big pop at the end.
Right. Yeah. So that's a really good breakdown of just the timeline of how everything works, right? Not just from an operator standpoint, but also from like a passive investor or a limited partner in that case. Standpoint as well. It's like, what is your money doing in this 5-6 years? When are you getting your money back? How are you getting it back? And all the different things involved when it comes to, answering these questions for them. So as a, an operator trying to raise money, what are some of the things that you kind of run into as far as, I know you mentioned one of them is, just putting your money there 5 years, can't take it out. I think that's a big objection for a lot of people. But what are some of the other objections you run into just as you're trying to raise money and telling other people about, the syndication? What are some things that people might be, more reserved about? They might not, be so enthused about when it comes to investing in syndications? What are some of these that you kind of seen just from you talking to other investors?
Well, the most common one that I hear is that where's the money going? And that's and at the end of the day, I mean, syndication when you're investing in a syndication, you have to realize you're investing passively, that you're not actively involved. That's one mindset you have to get over. And is that I think a lot of people, they still want to be actively involved, and that's fine. I started off as an active investor, right, by acquiring my own 2-bedroom 1-bathroom condo, but I just didn't want to do all the maintenance, finding the tenant, running background check and all that stuff. I'd rather delegate that task to someone else and focus on doing what I do best, right? And so I think that's the mindset that most people have to understand, is that if you want to be actively involved, you definitely should just go source and find your own deal. If you're planning on investing syndication, you're betting on the operator. You are basically having the lead sponsor, which is the lead operator, manage your funds. In a sense, you have to think of it in that way. But that's one thing that majority of the people are scared of, right? It's, if you're betting on the operator, you basically have to trust this operator, like that they're not just going to take your money and run away or just run the deal to the ground, right? So, making sure that the operator has great track record of success experience, that's very important, right, in our industry. Making sure that they've been around for quite some time, and they also have a team to back it off, right? Typically, I wouldn't invest in a deal where there's only one managing partner. I make sure that they have multiple managing partners, just in case if something happens, something goes south, and I can't reach this one person, then I'm pretty much doomed, right? In that sense. So to make sure that if you invest in a syndication deal, they have partners. There's multiple partners on it. And because I do hear this question a lot, where where's my money going, am I ever going to see it again? And I know that's the scary part, right? But that's the thing, that's at the end of the day, you are betting on the operator, because you can give a bad deal to a good operator, they'll make it a fantastic deal for you. But you can also give a good deal to a really bad operator, and this deal will run to the ground even if it's a good deal. So that's something that you have to really watch out for.
Right, absolutely. It's like giving your money to like a fund manager or like a financial manager, right? Where it's like you're just trusting the individual or the group or the company, whatever you want to call it, and just basically trusting them with the expertise that they have. And I think that's a benefit of passive investing, because there's a lot of people who are, they're doing quite well, and they do really good in whatever they do, whether they run their own business or in our case, a lot of real estate agents out there are, selling a lot of houses and making a lot of money in terms of the commissions, but they don't necessarily have the time to kind of slow down and, be an active investor themselves, because they're so busy selling houses every single day. So, from this standpoint, right, they can now just give their money to somebody and just say, hey, I want to take this money, I want to invest it. I don't necessarily want to just sit there or just spend it, right? I want to become financially free one day. You take care of it, right? And then you just have to find somebody that they can trust. They can find somebody that, they believe in when it comes to their track record. And it's actually a benefit if you want to think of it that way, because now you don't have to worry about it and your money just working for you, instead of you kind of going out there and being an active investor, which is almost like taking on a second job or running a second business.
Absolutely. And if you don't mind, I have something more to add, is just to reiterate what I said earlier. It's all partnership, right? Like, for me to be able to syndicate my first 2 deals, it was really difficult, especially during last year when the interest rate had kind of turned upside down on us. It was difficult to raise capital in that kind of environment. But the reason why I was able to syndicate a deal is because, I partnered with big companies like Think Multifamily. I'm not sure if you ever heard of them, but they're one of the industry leader when it comes to multifamily syndication. Mark Kinney, he created this group, and he oversees my my current deal right now. And so that itself, having him on our deal, provides all the credibility, because he's been in this industry for 30 plus years, and pretty much all the multifamily syndicator knows about him. So, and because of that reason alone, it provides a tremendous amount of credibility that we're in good hands. We're not going, even if this deal goes south, I am confident that Mark Kinney is going to help us weather the storm and be able to get us to the finish line.
Right. Yeah. Just finding the right partners, right? It's not a one person thing, and investing.
Mm-hmm.
And a lot of times it is a lot of people being involved in it, finding other experts just in different parts of the deal to be able to kind of help you get across the finish line, like you said.
Right.
So on another note, right? So you mentioned that most of what you do in terms of syndication is multifamily, as far as the asset class you like to invest in. Is there a particular reason why multifamily kind of, in your opinion, works better than all the different types out there? Because I know there's syndications for storage units and other types of deals, and as far as multifamily goes, what is the main benefit of investing in multifamily specifically, aside other than other types of asset classes?
Sure. I think I touched up a little bit about this, but I'll go over it again. I think scalability is the number one that I would talk about. You can build a healthy real estate portfolio by buying the single family resident until you pretty much run out of time and money, right? With multifamily, you can scale into millions of dollars of wealth. It builds wealth much faster. You're basically able to attract a higher caliber people, like I mentioned earlier, to work with you when you're buying 100 plus units versus one single family resident. But besides all that, the leverage component is also a while using other people's money, right? That's what's attractive about it. When you leverage an investment, you also reap the benefits of appreciation on the total asset value, while only having a small percentage of your own money in the deal, because you're using the bank's money, right? Majority of them, 70% of them comes from the bank. But it also produces cash flow, right? Like multifamily cash flow provides you with passive income that can be tax-free after depreciation. Yeah. One of the main distinctive benefits that multifamily has over other commercial property is that leases tend to be shorter term. So you'll be able to take advantage of the market fluctuation, right? And then there's also pretty sure you're aware across the nation now we have like affordability issues, and then we have a demand where there's a massive housing shortage across the United States due to the lack of construction during the subprime mortgage crash in 2008, which explains why pricing hasn't gone down as much while the interest rate keeps rising, right? And then the last thing I would like to touch upon is the tax advantages. Real estate provides the best tax advantage than any other investment. One being refinance. When you pull equity out of a property, it's completely tax-free. Depreciation, bonus depreciation, and cost segregation. And then number three would just be, the tax deductible mortgage interest rate, same thing as how it works as a single family resident. So these are all like huge advantages when investing multifamily. Like my best friend who invested in my first deal, I think he paid like $16,000 of tax this year, and he saved $12,000 by investing in my deal. So it's crazy to be able to save that much. And just by investing in one deal, and now he's pretty hooked. It's because we haven't made any distribution, but I've saved him a lot of money on tax just by investing in a deal like this. So happy for him.
Yeah, absolutely. Right. It's not just about how much money you make, but like how much money you get to keep afterwards as well. So like the less you pay the less you have to pay in taxes, the better. So that's absolutely an advantage of investing in real estate. So as far as becoming a syndicator, right? I'm sure a lot of people are interested in doing what you do and wanting to, kind of run their own syndications, being their own operators. What would you say, would be like the first step, or what are some of the things to kind of look out for in the beginning? Should they be, just putting together a team first, or should they be kind of looking as far as, potential investors first, or should they be, looking for deals first and then getting people involved? What would you say was the first step?
It depends on what you want to do. And it depends on what kind of pieces of the puzzle you have at this moment. So to give you like example, what I mean by that is I think you asked this question earlier and I didn't get to answer, is that my role as a syndicator is to raise capital, investor relation, marketing, right? So I'm not really the lead sponsor. I'm not working on the operation side as much. My business partner, he handles all that. So the reason why I brought this up to answer your question is because, of course, the idea is to be the lead sponsor, right? To be the main operator. That's where the real money is at. When you raise capital, you're not making that much money. You're basically making agent commission money. You're just getting a commission of how much money you're raising. So when I first started, I knew that I built a list of investors because I used to call absentee owners as a realtor. So I had this list of investors, and I knew there's got to be something that I can do with this list. And that's how I kind of connected syndication with what the resources I had at hand. And I just put those two together. And I was like, okay, I can raise capital for a syndication, but I don't have the track record to actually be the lead sponsor, right? I haven't built the relationship with the top agents, lenders, and property managers in certain markets. So I may have to leverage that part first, right? So that's what I mean. Like, that's the stage I'm at, is to be able to, right now, I'm just putting myself out there to be able to raise as much money and as much capital as I can. And once I have more capital than deals, then I'll transition to become a lead sponsor myself, right? To do that. Now, some people, they might just be able to become a lead sponsor right off the bat because they've been doing deals for 10, 20 years. They're very savvy and experienced in what they do. Let's just, for example, like if you're really good at doing Airbnb, right? And you've been doing for 10 years and you automated the system, you built the system, automate everything, and now you're financially free. Well, why wouldn't anybody trust you and want to put more money to you if you wanted to do bigger and expand your portfolio, right? Because at that time, by then, you build your track record. You have something to show people. Hey, I'm already financially free. I got all the system built, and why wouldn't you trust me with your money? Like right now, I'm looking to grow my business. I'm taking it to the next level. So it just depends on what stage you're at, right? So I don't know what kind. I'm not sure if I know how to answer your question. I just think that everybody is at some point. Everybody has different path of getting to where they're at and different experience. It just depends on what type of resources you have in hand to be able to use towards your next journey. Does that
Right.
make sense?
Absolutely. Yeah, absolutely it does. I think that was actually a really good answer because, not everybody's in the same spot, right? Some people might be a little bit more experienced when it comes to, doing deals, and, maybe they've been a part of, multifamily deals before. Maybe they're a commercial agent brokering these kind of deals, and they will be in a different position than, let's say, somebody who is just starting out, maybe invested in a couple rental properties, and they just want to be, move into syndications, right? So it's a completely different type of, experience level. And I actually really like the way you kind of put it, which is, you can really come from a standpoint of just being the capital raiser, right? The capital person almost, right? If you're able to kind of raise capital and market the deals, that's a skill set I think most people can develop. And you should be able to develop, especially if you're a real estate agent, right? Knowing a lot of other investors, knowing a lot of people who, maybe wanting to scale up their investment portfolios. That's actually a really good way to start. And I think it's a good way for a lot of people to kind of consider that. But, before asking, I didn't even know that, the roles could be breaking up into this where, you have somebody kind of managing the entire project, but, somebody like yourself who is, almost solely focused on the raising capital side and connecting the investor to, like the lead operator, if you will.
Mm-hmm, mm-hmm. Yeah. So, and that, again, that's the beauty of syndication. You can find things that people need help with and then just add value. And that's basically how I met my business partner, right? Because he can do everything from A to Z: raise capital, be the lead sponsor, manage the deal, underwrite the deal, find the deal, and so forth. But he's, like I said, he's hit a point where he's running out of time and also resources. Now he needs help, other people to help him out with other stuff, and that's where I come in to be able to help him raise capital.
Right.
So everybody has to start somewhere. That's the way I look at it.
Right. Absolutely. Right. But you have to start to actually, actually get the ball rolling. So it doesn't matter where you start, but if you, as long as you start somewhere, right?
Yeah, that's why everybody talks about take action, right? You
Yeah,
hear that every
right.
day.
Yeah, absolutely. So, I mean, as far as the raising capital goes, right? I know I'm not exactly sure on the details, but I am kind of familiar when it comes to raising capital for syndications. There are certain limitations involved. So, if you don't mind, kind of going over that, maybe like how you went about raising money for your first deals. What you can do, what you can't do, because for syndications, there's certain things that you can, but there's also certain things that you're not necessarily allowed to do when it comes to just marketing a deal and raising money for it.
Yeah, yeah, sure. I can go over that really quick. So in syndication, when you syndicate a deal, you have to comply with the securities law, SEC. And so you have your deal has to fall either under 506B or 506C. And what that means is just 506B is you can raise money from non-accredited investors. You and you can advertise, but you cannot advertise. So you cannot put your deal on social media, on Craigslist or anything like that. So you need to have pre-existing relationship with these non-accredited investors if you decide to take their money. 506C is you can advertise your deal, but you can only take accredited investors, and most people use 506C because it's more for savvy investors. So what is accredited investors? It's people with net worth of $1 million, or they've made $200,000 in the past 2 years. That would qualify you to be an accredited investors. So for my first two deals, it was a 506B because it's just easier to raise money from friends and family to start off. It's just difficult to do a 506C unless majority of your investors are accredited investors already. So
Right. Yeah. So that does make a lot of sense because there's different ways, right? There's different rules and regulations in place when it comes to raising capital. And I think, it's really good to kind of get an understanding of what these regulations are, just so that, when people start getting into it, they're familiar with it. They're not caught off guard or surprised. Somebody might be putting it together in their mind, right? Like a really beautiful marketing plan. And then they get to the point where, they see the regulation. It's like, oh, I can't do that. So it's always good to kind of, get that information out there and just make it clear because, when you're dealing with other people's money, right, you know, it's a blessing, but it's also, you have to be really responsible for it because it's good to have money, raised, but you're also on the other hand, need to be very responsible for, dealing with somebody else's money and their investment as well.
absolutely, absolutely. When I got into this space, I realized, yeah, when I'm just investing my own money, like you can do whatever you wish. You can take more risk. Your risk tolerance and so forth. But when you're taking other people's money, you have to be even more cautious with your own money, and because your reputation, your credibility, everything's on the line. You screw up once, your career is over. So
Right. Yeah. Nobody else would invest with you ever again.
yeah,
So yeah.
word gets around, quick
Yeah.
in our space. So
Yep, absolutely. So
mm,
just kind of wrap things up. I mean, you shared a lot of great value with us already about just syndication and how, the details of it works. But
mhm.
as far as, kind of in your personal experience, right? The different things that you've been a part of, different real estate deals that you've been a part of. What would you say some of the most common mistakes that you either have made or have seen people make? And how would you go about avoiding them if you were to kind of go out there and either invest in syndications as a passive investor or as an operator, being the operator on the deal as well.
Yeah, so I think the most common mistake that we all make as an investor is just waiting. So I think, like, especially with the time right now, right? Like, people think that there's going to be a crash coming in, and so everybody's just holding on to their cash for as long as they can until they finally find a deal. And I think I used to think like that too. I used to, because I come from a savers mentality, and that's how my parents raised me as a part of the Asian culture. And so I but then I think it's just lack of financial education, and that's what I have to say is that I think if you're just always holding on to cash, there's always, I mean, your money is losing value due to inflation. First of all, I mean, that's common sense to most people now. But second, it's like you gotta understand that I think when you decide to hold on to cash, you're not, your money is just sitting there. It's not working, right? The purpose of investing is to use your money to make it work. And so when it's not working, it's basically fear that's making you, and also just not knowing how to invest in that kind of market.
Right.
And all it does is just take some financial education to and also some networking, to kind of get you over the hump. And I think that's what most people, make mistakes on. And I made a mistake on that too. So
Right.
I'm not even going to deny it, because I know that, I just didn't want to, it's not that I didn't want to understand. I wasn't motivated enough to study. So I think, and to put myself out there to join communities, real estate communities, to network with like-minded people. And you then you'll realize you can make money in any markets, whether the market is going up or down. And you'll hear that from savvy investors.
Right. Absolutely. And it's so important, right, to have your money work for you so that you can one day no longer work. So that's part of the benefit of that, of investing is, if you have your money work for you, then if you have your money making money for you, then that's how you actually become financially free, and that's how you build that wealth that you know everybody's chasing after. So it's a very it's very important for everybody to get their education when it comes to whether if it's investing or just learning more about how these different types of asset classes work, listening to this podcast, learning about syndications, right? And then you can make the educated decision whether or not this is, the right type of investment for you, right? And, a big part of it, like you said, is the fear and, finding the right person and finding the right, expert to actually help you invest. That's what's going to be really important as well, because, you only have so much time on your hands as well. And that's where, like you said, the networking is really going to pay off, right? If you don't go out there, if you don't start meeting more people who are financially savvy or who are great investors, and, you're not going to have the connections to, invest your money with or partner up with or just simply learn from as well. So it's really important, like you said, to just get your education, get out there, start listening to more podcasts, start connecting on social media with some of these, investor groups. Bigger Pockets is a great one as well, or any local groups as well. So
Absolutely. I mean, resources are free, you have no excuse. I mean, we have Chat GPT now that can answer any questions you have. so
yeah.
there's no excuse for not educating yourself anymore. Like it's out there. And if you want to take it to the next level, join mastermind groups, invest in yourself. Put some money out there, spend 5,000 to 10,000 to join a group. Yeah, it might sound costly, but you'll see great return on investment on the money they're paying, because just getting into that mastermind group, you're getting involved with serious people. They also pay 10,000 to join the group, right? So you'll excel so much quicker when you surround yourself with like-minded people.
Right. Absolutely. So Jim, I just want to thank you again for coming on and sharing your story and sharing all the value and tips that you had to share when it comes to investing in syndications.
Mm-hmm.
So, for any of our viewers or listeners who want to learn more about what you do, who want to reach out to you or just follow you on social media, what are some of the best platforms to reach you on or just follow you on?
Yeah, they can check out my website at formosainvesting.com. I wrote this short 20-pager ebook with basically all the mistakes I learned as a real estate investor. So you don't have to make them. So they can download that for free on my website. They can also check out any of my social media links, LinkedIn, Facebook, Instagram at Formosa Investing.
Okay, awesome. We will leave all the links to that in the description and the show notes down below. So, Jem, I just want to thank you again for being on the show. And just before we let you go here, is there any last value or last tips you want to leave before you sign off here?
No, not really. I mean, I guess like this is one of those questions where I get asked all the time, where if I were to do things differently, like what would I do? and this is something that I always share with most people or with the audience, is that just be more open-minded. I think, have the right attitude, have a positive attitude to approach anything and try new things out. I think that's one thing that I've learned over the years, is that I was very close-minded 10 years ago in my 20s. And I don't know why. I feel like, when you argue about politics, you're either the far right or far left. Well, that was me back then. I was either far right or far left. But now I try to stay on the edge of the coin. So when you look at the coins, there's actually three sides. There's the heads, tails, and the edge, right? Heads and tails are the far right and far left. Staying on the edge, it kind of helps you the most, because you get the best of both worlds, and it's really difficult to do that with anything in life. So that's what I would recommend, and I can give you an example really quick, if you don't mind. Is I come from a saver's mentality, right? From background, that's how my parents raised me. So my whole life, I've always, I haven't borrowed any money. I just use whatever cash I have. And so with my first condo, I purchased all cash offer. It's a short sale. It took me a year to close. But then, like, after I acquired this building, I started to educate myself more about real estate. I picked up the Purple Bible book, Rich Dad Poor Dad, like everybody else. And then he talks about how why would you not use leverage? Why would you not use other people's money? What, you get tax benefit, the government wants to partner with you and so forth to create more housing, right, for other people, to house people. And so that's when I kind of had that mindset shift, right, to borrow money. But even up to that point, I've always lived a comfortable life without borrowing at all. And so now that I get the best of both worlds, right? Because now I know how to save money, but I also know how to use good debt, because there's good debt and bad debt in leverage. So that's the best of both worlds by staying on the edge. That's what I have to say.
Absolutely. That was a great tip, Jim. So I want to thank you again for being on the show. And for any of our listeners who are tuning in, thank you for tuning in. And I will see you guys on the next show. Take care.